Today is November 14th and it's 1:24 p.m. Eastern Time. This is the monthly chart for Anheuser Busch InBev, ticker symbol BUD. And as of Friday's close, it closed at $59.59. And that's right here, this candlestick, it represents November. This is a current month. So each candlestick represents a month's worth of trading. And from this review, all-time high was $136, and this was back on September 2016. And its all-time low was $32 back on March 2020. Since reaching this low, price has been working its way back up to almost about as high as $80. But for the past few months, it's stalled out, and price has pulled back to where it is as of Friday's close. So what I like to do is I use the all-time high as my anchor point, and I'll add the regression channel right here, just so this way I can identify local support and resistance levels. And the red band is resistance, meaning that price couldn't get above it before being rejected. The blue band is acting as support. Now, even though price fell below it, price did still hold the overall structure and returned inside this channel, right? So we have touch points here, we have touch points of support here, touch points over here. Now the yellow band represents both support and resistance inside this overall channel, right? So when price got above here, it had a difficult time getting above it. It took about 6 months. But when it did, price tried to run up to test this upper band, but it seemed to have lost momentum and price fell back down. Made another attempt to get above it, which it did. Another attempt to test the red band failed, and almost over a year, I don't think it's a year, it's a little under a year, price finally fell below it. Right? And again, overall market structure was maintained. So from my perspective, this is a valid channel, right? But the reason I'm looking at this is because I'm not looking to take a long-term position. I feel there's an opportunity coming in a few days for a potential test of this yellow band. Now, there is a probability as well that price could curl back towards the upside. But as we can see that here, for the past 5 years, that hasn't happened. So I think that reduces the probability that price will not be able to curl back up to retest this. Again, it could, but I think the chances of that are pretty much smaller compared to price testing this yellow band. So with that said, I'm going to toggle down to the daily time frame. So this way, each candlestick represents a day's worth of trading. So yes, there's a gap. I'm aware of that gap. And usually whenever there's a gap, market price will eventually reverse itself to fill the gap. But again, no one knows when gaps are filled. So I'm not even going to consider that in this evaluation. I mean, there's a gap right here, right? So there's no way that price could come right back up just to fill this gap to come back down. It could happen, but I don't think that's likely. There's gaps up here as well, right? But I'm looking at the overall market structure based on, 5 years worth of trading. Again, I don't feel it's going to curl back up and run to test the upper band of this channel. I think it's going to come down to retest the yellow. So here, ever since this gap was created, price has been working its way down. Maybe it will come down and fill this gap sooner. I don't know. Again, I'm not looking at that. I'm just looking for the initial breakdown, right? Because right now, price is being supported at this level. So, and here, it's resistance over here. So if I was to draw a line and say that, this area seems to be support and resistance, right? Because as it's coming down, support here, but failing, right? And then the next day it gets rejected. So now it's resistance. Another attempt, resistance, resistance. Okay. So as price came back up, a large momentum or large trading during the overnight session or pre-market pushed the price much higher. And it started to fade, and now it's supported here at 59.50, right? So let me just make this a bit clearer. So what I'm anticipating is that I feel price is going to eventually fall below this level, leading into the December 17th monthly expiration for option contracts. So I'm anticipating that price will be below where it is right now, or where it closed Friday, to be somewhere in the $57 price range. I'm anticipating at least an 8% pullback. So 8% from this price level, not sure if it's gonna, %8 would be right about here. 8% would bring it down to below $55, right? So that's what I'm looking for. I'm not saying it's going to spike down. It may drag out this downward trend, this $8 move, 8% move towards the downside may take 2 weeks to happen, but at least I want to be able to capture, the initial breakdown, right? Because then I'll be able to capitalize on that. So with that, I'm looking at the December 10th expiration. So here's my $57 strike. It's, as of Friday's closed, it closed at $65 per contract. So this is something I'm looking at right now. And I was also looking at December 3rd, but the $57 December 3rd expiration also has the same premium of $68, right? So it's almost similar, but I think December 10th is more favorable because it gives me the extra few days for this option. Because if price consolidates, let's say price goes sideways for 3-4 days, that is a negative effect to an options contract because of time decay. So that's why I'm considering the December 10th, not December 3rd, as tempting as it is. So in the event, right, let's say it does play out. So this way, if price drops, right, to the purple, because all option contracts highlighted in purple are considered in the money. So I'm on the put side, which is a bearish sentiment. So essentially I'm shorting this stock, right? So if price gets into the purple, let's say at the $60 price level, the premium would go from at least $65 to an estimate of $172 per contract, right? So multiply that by the number of contracts, and that's your initial profit or loss. So that's the rationale for this position. What I'll do is I'll create an alarm just to notify me to reassess the trade conditions. So if price falls below 59, let's say 59.35, you know what? Let's just make it 59.35. Potential short put 10 December 57. So here's my alarm. Here's my alarm. So in the event price comes down, I'll take a look. I'll reassess the setup, and if all conditions are met, I'll go ahead and purchase those contracts. Hopefully it stays in the 67 or less than 70 cents per contract, because I want to get in on on those contracts very early. So until this alarm is triggered, I'll pause it for now and then pick it up in a few days, and I'll be back. Today is November 22nd, and it's a little after 9 p.m. Eastern Time. And this is just a quick check on Anheuser Busch. As of today's close, it closed at $58.50. And since my initial recording, price did trigger my alarm, and I've since gotten into a position involving, as mentioned, the December 10th expiration date with a $57 price target. And right now I need price to keep working its way towards the downside below this horizontal line, this white horizontal line, to be a profitable trade. And I need price to be below that by the time it crosses this line right here. And this is the December 10th expiration date. So I need price to be below this before reaching this vertical white line right here. So if I click on the trade tab, as shown here by this green flag, I am a participant of the December 10th expiration, which expires in 18 days. So my target here is $57. I picked up 7 contracts, all go worthless in 18 days. My entry price was 64 cents or $64 per contract. And as of today's close, it closed at 66 cents and up overall at $12.60. And if I show trades, the first 5 of my contracts I purchased on November 17th, a little after 10 o'clock in the morning. And as the day was winding down, I added 2 more at 3:30. So that's a status check of my position or this trade. Again, I just need price to keep working its way towards the downside before it crosses this white vertical line. I'll do another status check in a few days, and until then, I'll be back. Today is Tuesday, November 30th, and it's a little after 11 a.m. And just a status on the Budweiser trade. Price is currently trading at $55.94. And for the session, it's down $1.42. So as you can see here, today's candlestick, price is way below my target price of $57. So there was a gap down during the pre-market. So a lot of bears stepped in and started selling this position out. So what's showing here is that I have an order to close out this trade. Considering that there's only a few days remaining in this contract, and that because of there's a low right here, it looks like a support level right here. So my concern is that there could be a sharp reversal back towards the upside. So I just want to protect as much as I can. And so I have this order sitting right here, and it's slightly below the low when there was a strong push a few minutes ago, and it has just started to cool off. So going back to the trade tab, right now the trade is up $961. The contracts are now worth a little over $203 each. When I bought into these contracts, it was trading at $64. So, and what I'm showing here is if I click on view orders, I have an order to close me out at $2.25 per contract. Actually, when I put the order in, these contracts were a little over $2.40 at the time before it started cooling off a few minutes ago. So, but in any case, I have an order here to fill me at $2.25 and it's to close out all 7 contracts. So just to do the breakdown, if my order is filled at $2.25 per contract minus my $64 entry, That would bring the value of each contract to 161 times 7 contracts. So a profit of 1,127 is my target if it's filled today. But I'm also monitoring this. If it doesn't fill me this afternoon or this morning, I'm anticipating a further drop in the afternoon session. So I might push this down even lower and target maybe the 235 or 240 price. But I'll reevaluate that as the day progresses. So until the next update, hopefully it's like going to be maybe by 2 o'clock. We'll see. So anyway, I'll pick it up then and I'll be back. So it's been a few minutes and this will be my last update. So price is now trading at $55.34 and it reached my take profit level of 225 per contract. And just before I get to the trade review, here was the 8% markup that I identified when I started this recording. So I got in on those contracts right here on November 17th. And prior to entering the trade, I did say that there would be at least an 8% pullback. Now, where I sold, it's slightly above it. So this was about a 7.5% pullback that I was able to capitalize on. Now, I decided to get out of this, again, as mentioned, because this area down here seems to be an area of support. So my concern was that price was going to consolidate, and because there's only a few days remaining in the life of these contracts, anytime price consolidates or goes sideways, it eats into the premium, right? So it's going to lose value. So I thought it would be just in my best interest to get out of these contracts while price is still pushing towards the downside. Now, if price does continue running lower, I'm okay with that because my game plan was this 8% target, and which was pretty much met, even though it was at 7.5%. But I'm not complaining. So if I click on the trade tab, I have a 0 position, right? Quantity is at 0. I'm flat out of this trade. So if I click on the monitor tab right here in the red, today at 11:43, it sold me out. Right here's the sell, 7 contracts, and my $2.25 target price was met. So between my entry price of 64 cents, right, this averaged that to 64 cents or $64 per contract. This was a net profit of $161 per contract. So overall, it was a little over $1,100. Now, based on my entry date and exit date, and excluding the weekends and Thanksgiving, this trade, the duration of this trade was about 8 days. So yeah, I was glad to, be fortunate to identify this before the breakdown. And I'm still reviewing other setups. So I'm lining them up, they're all in queue, and I'll get to them in a short order. But, for the next setups and for the time being, I'll end it here, and I'll see you on the next trade.